going to be the USDJPY. So the last time we traded this asset was about 4 to 5 weeks ago. Remember, we were trading the GBP USD at some point after we dropped the USDJPY due to the uncertainty that gripped the market following the fear of the Bank of Japan's intervention at that point in time. Now, going into the new week, I'm beginning to see some interesting trading setup unfold on this chart, and I'm of the opinion that we should include it into our watch list for this week and see if we can capitalize on a significant move this week. So since the inception of the new trading week, the Japanese yen has sustained notable buying pressure amidst the concerns over Japan's potential intervention in the foreign exchange market, which was triggered by the currency pairs surging to a fresh year-to-date high around the 51.865 level, as you will see here. Additionally, the hawkish tone observed in the Bank of Japan's January minute, which was published this morning, has also contributed to the downward trajectory that has gripped this USDJPY this morning. This minute disclosed that the Bank of Japan board's members have recognized a growing probability of achieving the central bank's inflation target at a gradual pace. Furthermore, deliberations among members revolved around potential measures to be taken if a positive correlation between wages and inflation is confirmed. In fact, some policymakers acknowledge a reduction in the risk of inflation surpassing expectation. Now, in light of this recent development, the Japanese yen could find support from these factors, and of course the possibility of Forex intervention with this recent speech by Masato Kanda, who is a prominent currency diplomat in Japan, issuing a cautionary statement indicating readiness to implement appropriate measures to counter excessive weakness in the Japanese yen. So with this being said, and considering the US dollar experiencing a decline despite the uptick in US Treasury bond yield, how do we intend to navigate this current market dynamics for this week? So to guide our trading decision for this week, I started my analysis on the daily time frame. And here on the daily time frame, what I did was to consider the character of price action since the month of December. That's an historical data of about 4 months, I think, 4 months exactly. And it's obvious that price action has been bullish ever since it tested this low at the 140.720 during the later part of last year's trading session. And to emphasize the strength of the buyers, you can see price this ascending trend line here after connecting the series of higher lows. However, despite the strong bullish momentum in the last 3 to 4 months, it is quite obvious that as soon as price tested that 151.750 zone, we have seen some selling pressure emerge from that area. And in fact, if we go to as far back as the month of November of last year, you will see that this same area was also serving as a strong selling niche, as every attempt by the buyers to break out of the structure was met with stiff resistance from the sellers. Now, the last couple of days, we've seen continued selling pressure around the 151.750 again, which begs the question that will selling pressure persist one more time, which could be a retracement of this impulsive move, maybe back into either the ascending trend line or the 149.00 area to incite an uptrend move, or even break down the structure to incite a sell-off. And if we look at the distance between where price action is right now and this structure, we are looking at between 180 pips to about 250 pips if price drops into this area. So we do want to be on standby to capitalize on any bearish move if it ever happens. And we cannot ignore the possibility that price could break out of the 151.750 at least for the first time in the last 4 months or so. So like I was saying, so we scaled down into the 4 hours time frame where I took into consideration the character of price action in the last couple of weeks, and of course it's clear that price action has been bullish, and in fact I have this ascending trend line to guide our trading decisions for this week. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for this one out. What's happening here? Okay. Okay, so I need only one of them, so let's just put it right here. So we have an ascending trend line in place, and as long as price remains above the ascending trend line, we're looking out for more opportunity. However, something interesting is going on in this market. As you will see, as soon as price finds a new high, we're beginning to see the possibility of a reversal setup. Hold on a second, I want to capture this one too. So this level here is 150.630. So 630, as you will see here. Now I will tell you how important that level is right now. So you will see that following that impulsive move here and the inability of buyers to break out of that 151.750 area coincides a situation where the breakdown of the 150.630 could validate a reversal setup here in the form of a double top structure, where the 150.630 will be serving as the neckline of that structure. However, before the neckline can be broken, I still think we have the privilege of joining that how many pips move here, about 60 pips move before the neckline is broken. So to guide our decisions for this week, we have our key level at the 151.200, which is right here. Now you can see how beautifully it shares a confluence with both of these ascending trend line. And in fact, if price action breaks down our key level, price will also have broken down both ascending trend line to give us a bearish signal to join a bearish move to the downside. However, if buy pressure persists above our key level, then we shall be looking out for buying opportunities where the further breakout of the 151.750 will welcome more buy positions here. So this is what I'm looking at on the higher time frame from the USDJPY. Now to guide our decisions going into the new week, we want to see how the market is going to be reacting to our key level at the 151.2. Now scaling down into the 1 hour time frame, things become a little bit more interesting, as you will see here. After taking into consideration the character of price action in the last 10 to 12 hours now, you will see that price action has been confined within the range of the 151.430 and the 151.050 area to emphasize the prevailing uncertainty in this market. And you know how we do it whenever we have this kind of range bound structure. We want to exercise patience and wait for either price breaking out of the resistant line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. Now, this is where it becomes much more interesting. Now, if price action breaks out of the resistant line of that range, then you will see that price action is will be back above that ascending trend line we spotted on the higher time frame, welcoming more buying opportunities at this point as you will see here. So if price breaks out of the 151.430, then we want to be joining an uptrend move. However, if price action drops below the support line at the 151.050 level, then you will see that price action would have broken down the ascending trend line we identified on the higher time frame, and in fact we have a new trend line here after capturing the pivot high since last week Friday. And if price could drop below both this descending trend line and the support line of that range bound structure at the 151.050 area, we are going to be good to sell, as we will be back within the seller's territory. So it's a simple trading setup we have here on the USDJPY. So I do encourage us all to mark out this level, as our center of focus for today's trading session is basically between the 151.430 and the 151.050 level, where depending on the direction of the breakout will be guiding our trading decisions for today. So this is my simple view on this particular asset for today. So I encourage us all to mark out these levels, as we shall be using them as a reference point to guide our independent trading decisions for today.